Hello and welcome to this edition of the Legal Podcast powered by IndiaLaw LLP. I am Aryaveer and today we will unpack the Reserve Bank of India's newly notified Credit Information Companies Internal Ombudsman Directions 2026 issued on 14th January 2026 under Section 11 of the Credit Information Companies Regulation Act 2005. These directions repeal the 2023 Master Directions and recalibrate the internal grievance redressal architecture for every credit information company (CIC) in the country. The RBI's 2023 experiment with an internal ombudsman framework for regulated entities revealed two pressure points: inconsistent escalation timelines and variable independence of the internal ombudsman. Learning from that, the central bank has ported the concept into the CIC space through directions that take immediate effect, except for Clause 7, Subclause 2, 14, Subclause 2, and 14, Subclause 4, whose compliance deadline is 30th June 2026, which includes every CIC holding a certificate of registration under the 2005 Act, like CIBIL, Experian, Equifax, which must live by these rules. Key statutory labels you will hear repeatedly are complaint, any written or electronic allegation of deficiency in service by a CIC with or without a claim for relief. Customer, anyone who uses or applies for a CIC's service. Competent authority, the managing director or CEO of the CIC, that is, the person who can overrule the IO, but only with Board Consumer Protection Committee approval. Internal Ombudsman or Deputy Internal Ombudsman, the Ombudsman contractual appointees who sit at the apex of the CIC's grievance redressal mechanism but cannot receive complaints directly from the public. Clause 5 mandates that every CIC appoint at least one internal ombudsman. The qualifier to become an internal ombudsman is to either a retired or serving equivalent to a general manager in a regulated entity or financial sector regulatory body with minimum 7 years experience in banking, NBFC, supervision, payments, credit information or consumer protection. Serving officers must resign before taking the post, and the incumbent must not have been employed by the CIC or its holding or subsidiary in the past. Deputy Internal Ombudsman under Clause 6 mirrors the template but drops the rank to Deputy General Manager equivalent and the experience threshold to 5 years. A Deputy Internal Ombudsman cannot multi-hold appointments across CICs. An Internal Ombudsman can subject to board-level Consumer Protection Committee approval. Clause 7 obliges the board's Consumer Protection Committee to review the required headcount annually, balancing complaint volume, complexity, and the IO's need for sufficient time to apply mind to fairness, equity, and natural justice. Clause 8 locks the minimum contractual tenure at 3 years and caps total revenue, including reappointments, at 5 years. A CIC must kick off recruitment 3 months before expiry and ensure overlap for knowledge transfer. Either post can be terminated only with the Consumer Protection Committee's nod. Vacancies from resignation or otherwise must be reported to RBI within 10 working days and filled within 3 months. Administratively, the IO reports to the competent authority, usually the CEO for logistics, but functionally to the board's Consumer Protection Committee. During leave or vacancy, the Deputy Internal Ombudsman steps in. If both are absent, a GM grade official may be temporarily designated for up to 1 month but must be firewalled from business verticals. Clause 10 requires the CIC to second adequate officers and staff, provide IT support, and locate the Internal Ombudsman office at the head or corporate office to ensure accessibility. Clause 11 tasks the Internal Audit Department with an annual audit covering adequacy of human resources and infrastructure, auto-escalation within 25 days, awareness campaigns, data submitted to RBI. Crucially, the audit must not second-guess the IO's merits, only process integrity is examined. Clause 12 is the operational heart. The Internal Ombudsman does not accept walk-in complaints. He or she reviews only those complaints that the CIC has already labelled as partially resolved or wholly rejected. After scrutiny of records, the Internal Ombudsman may uphold the CIC's decision, direct full or enhanced relief, including compensation for consequential loss, time, expenses, harassment, or mental agony. Mirroring the RBI integrated ombudsman scheme, or recommend systemic policy changes to plug repeat root causes. A reasoned order must be issued within 30 days of receipt by the Internal Ombudsman, and the CIC must communicate the final answer to the complainant within the same 30-day window. If the complainant remains aggrieved, the CIC must advise the right to escalate to the RBI Ombudsman, supplying the CMS portal and the physical or email coordinates of the centralized receipt and processing center Chandigarh. This enables supervisory review, facilitating appellate scrutiny by the Ombudsman and discipline internal decision making when rejection must be justified in writing by an independent authority. The cost of arbitrary or poorly reasoned decisions decreases. The directions embed the internal ombudsman firmly within the board level governance structure of CICs by routing functional oversight through the Consumer Protection Committee of the board. The Internal Ombudsman is a permanent invitee to the Consumer Protection Committee meetings and must submit quarterly but at least half-yearly activity reports. Clause 13 crystallizes the override mechanism. The competent authority may overrule the internal ombudsman, yet every override, together with RBI ombudsman decisions that favor customers, must be placed before the committee for post factum review. This design ensures that deviations from the ombudsman's finding are not treated as routine operational matters but are subjected to explicit board level scrutiny, reinforcing accountability and institutional responsibility for consumer protection. Clause 14 operationalizes a fully automated complaint management system with only three disposition tags: fully resolved, partially resolved, and wholly rejected. Auto escalation to the internal ombudsman triggers within 25 days of the original complaint received. A standard operating procedure must codify information flow, senior level review before rejection and exclusions, notably corporate frauds not impacting the customer, commercial policy decisions, sans service deficiency, HR or pay disputes, matters sub judice or under Section 18 of the 2005 Act. Clause 15 embeds the internal ombudsman framework into the RBI supervisory scope, treating grievance redressal as a core element of compliance and risk assessment. The Department of Supervision will score customer service and grievance redressal during annual inspections, while the Consumer Education and Protection Department may probe cases where the CIC overruled the internal ombudsman and the complaint still prevailed before the RBI ombudsman. Clause 16 prescribes reporting discipline. Within 5 working days of appointment, the CIC must email internal ombudsman or the deputy internal ombudsman particulars, profile, tenure, contact details. A quarterly return of the annexure format capturing pendency, internal ombudsman decisions, compensation paid, root cause insights must reach RBI by the 15th of the month following the quarter. Clause 17 retires the 2023 Master Directions with immediate effect but validates all actions taken thereunder. CIC must therefore realign existing internal ombudsman appointments, emoluments, and reporting templates to the 2026 architecture by 30th June 2026, wherever the deferred clauses apply. In short, the RBI has transplanted the independent, time-bound and audit-verified internal ombudsman model from banks and NBFCs into the credit information ecosystem. Boards must resource the office, protect its functional autonomy. Thank you for tuning into the Legal Podcast powered by IndiaLaw LLP. Stay informed and stay in compliant, and I'll see you in the next episode.